Hi trader, this is Chris from Elite Currency, and time for a new update, taking a look at the euro dollar and pound dollar, of course, at almost the end of April here. We have one more week left, and we had some interesting developments on the pound dollar falling very quickly. Euro dollar still kind of in a indecision zone here, and I think that there could be a breakout soon to the upside. Let's take a look at the charts right now. Now, perhaps you were surprised that I'm still bullish on the euro dollar because pound dollar has been falling a lot. Euro dollar is moving lower as well. So you might become bearish when looking at this chart. However, considering the choppy sideways move, as you can see here, above the long-term moving averages that are still below it, the overall trend is still up, and price is just making consolidation zone, as I've mentioned in previous videos as well. So what I'm expecting here, basically, as mentioned already before, is an ABC, an ABC, and as we already indicated, that this breakout is probably going to struggle because there could be another ABC. So I think that there is space for price to fall, and where this C wave will end can be at 122, it could be at 121.50, maybe even a little bit below it at 121, right? Anywhere between 121 and 122, even 122.50 is a little bit early though. Probably 121.50 is more likely, or 122 could be a bouncing spot. Now if it does break below 121, 121.50, that would change things, and that would of course alter the chart. We will have to reanalyze it at that point. Then maybe this is not a bullish environment anymore in that case. But as long as price stays above that, price can fall next week or even the week after. But I would expect price to bounce at this support zone because I think it's a very strong support zone. I think it could end the wave 4 pattern, right? It's not only about support or resistance, is about what kind of pattern we expect at those levels, and in this case it could be the end of wave 4 finally, and we could start finally wave 5. Now that wave 5 might not be a huge wave, it might just make a higher high and reverse, it might go to 127.50. Eventually though, I'm expecting dollar strength for a bigger ABC. And once the ABC is completed, I would expect, again, dollar weakness. So on a monthly chart, we're basically looking at one more higher high, an ABC, and then dollar weakness again. All right? So that's kind of the bigger picture here in play. So breaking it down, as I said, we're expecting the wave 5 of wave 5, then an ABC. So wave 5 right here, that's one wave 5, and the other wave 5 is here. 1, 2, 3, 4. This is 4 probably. So that's why on the daily chart that we could be bumping into support and turning around. We are not surprised by price turning here because of the bigger A, B, C that was expected. So that price broke below these support levels and is making a downside is not a surprise. It's something we said that could happen if price fails to break to the upside here, which it did, and it broke through support, and we're getting that wave C. All right, so from this point of view, I think a little bit more downside is likely next week. I think that on an hourly chart, for instance, I wouldn't be surprised perhaps to see some kind of, I'm not sure we have to see how the market opens on Monday. Monday is often kind of a day that sets things up, and as the week progresses, things kind of break loose and free. So it depends on how price opens. But for instance, if we see a flag like this, that would be an interesting pattern because a break below that would indicate the continuation to 122, maybe 121.50. That could be a trade on the lower time frame that capitalizes on that wave C. This looks like a wave 1, 2. This could be a wave 3. So from that point of view, if we put a fib from here to here, all right, we would expect price to stop roughly around these fibs and turn, especially if we get a pattern that confirms it. That would be an interesting pattern and breakout and continuation for that wave 5 of C. All right, price should not go back above this bottom right here. Otherwise, this is not a wave 1. It would, wave 4 should not go into the territory of wave 1. So that would invalidate that wave 4. So any retracement should stay below that purple line. In that case, if it does stay below that purple line, it's good for continuation, I think, for downside. Now, what could happen is that price might still make one more lower low, make a wave 4, and then one more lower low. I'm not saying that the next lower low is, the end of wave 5 and C, it could make 2 more lower lows. Why? Because there could be, for instance, wave 1 could be here, 2 here, and there could be a wave 3, wave 4, 5. There could be internal 5 wave within the bigger wave 1, 2, 3, for instance, right? So that's something you want to be aware of as well. But ultimately, when price gets into this zone right here, where the targets are as well as you can see, then I would be interested in taking a look at bullish candlestick patterns on the 4-hour daily chart for a potential bounce. All right, so that's my game plan. That's my vision at the moment. Pound dollar has been breaking to the downside very strongly. We already warned about the downside potential if there is a strong momentum, which indeed occurred here. We got a bear flag and a break. Then we said that this could be easily a wave 4, 1, 2, 3, 4, and that as long as price stays below this bottom, that there could be a continuation lower. And if you used our SWOT system, you would see the red candle right there on the chart, signaling the entry right there. And boom, if you use the 1-hour chart at least, and boom, you got the continuation. So this is probably wave 5. The problem is that this could fall further than we expect without retracing necessarily, because look at this strong bearish engulfing twins on the weekly chart. Finally, we're getting that bearish reaction we expected. We expected uptrend continuation, but that price will have some struggle at resistance at one point or another. This is finally taking place, and the turning spot, ultimately, we were warning for 142.50 up to 143.25, I think. Well, it went a little bit further than that, 143.75, but that was the turning spot, and we got bearish engulfing twins on the weekly chart. Now, such a strong candle close right at 140. 140 is a strong support level, but if the close is that bearish, that near the low, it doesn't have to make a retracement. This could fall before we get maybe some kind of retracement. It's difficult to tell at this moment. This is very big impulse, and it doesn't have to retrace. If it does retrace, it does look like it finished 5 waves. There could be then, in that case, an ABC correction, and then I would say a follow through to the downside. All right, that seems pretty likely. We can put a fib from the very top to the very bottom. All right, and you see that price hit the 50 fib. That the price could turn. At the 50 fib. There's a confluence here, for instance, or the 61, maybe even the 38. Any of these fibs could be turning spots. I wouldn't expect a very deep retracement, but you never know. So that is if price makes an ABC correction, then that would be great for downside. But will price make that ABC correction? Probably eventually, yes. But will it be at the beginning of the week? I'm not sure. Considering the momentum in this market, I wouldn't be surprised if there's another bear flag and it's just a continuation lower. That's very possible. But to trade that, I would need to see a pattern first, because this is untradeable at this moment. It was tradable here. It was tradable here for very risky daredevils, maybe up in here. That's not something I would do, but maybe even, yeah. So those were the 2 best setups. Now we would need a kind of pattern before, a break of that pattern to trade it maybe one more time, and continuation lower is possible. Alternatively, if we see strong momentum to the upside and then a correction lower, then that ABC pattern to the upside is more likely. So will price make an upside, or will it make a pattern? That will kind of help us determine whether downside or upside is more likely. Eventually, the retracement will happen, but when is the big question? So we have to take a look at the patterns first. It also might not make any patterns and just keep falling. In that case, I'll do nothing at this moment. It's not a good moment to trade. I would need to see a pattern first of all before trading it, like we had here, or like we had here, an ABC correction like that, and a re-break below. Those are the things you want to wait for before trading it, I think. Last but not least, you might be wondering, why is $0 ranging at this particular spot? But we have a great tool that helps with that, the 5-4 EMA and our Wiz tool. And you can see that the best zones are often between level 3 and level 5. Look at that momentum right here. Then up to even level 6. Look at this momentum from here to here. And once it's in between 6 and 7, typically you get a range. So using the Wiz tool is immensely important for our trading. It helps not only on lower time frames, but even on higher time frames, as you can see. So that's really, really very useful. And eventually price might get back down to the level 5, for instance, or the long-term moving average. And that could be the restart moment for an uptrend towards perhaps level 7, which is 127. All right, so that moment might be soon. Now, of course, if it breaks below level 5, then of course we might be in a downtrend at that point, and we would start flipping the whiz around. But it helps understand when to expect momentum and when to expect range, and that is part of the SWOT philosophy and method, software and systems. So if you're interested in that, of course, feel free to join ECS SWOT or ECS Live. In any case, wish you all good trading and talk to you soon. Cheers.